how to invest in stock market volatility and make millions. What if I told you that the best time to invest isn't when everything is going great, but when the stock market is crashing? Yep, you heard that right. Smart investors don't panic when the market is volatile, they take advantage of it. Today I'm going to show you exactly how you can make millions by investing in downturns, whether it's stocks, real estate, or even businesses. Stick with me because this is where wealth is truly built. Before we get into the program, I'm going to ask you to subscribe to the channel and grow that wealth with me. Also hit that like button, and when this video is over, share it with someone else. Now let's get to the program. Section 1. What is market volatility? Alright, so what is market volatility? It's just a fancy way of saying that stock prices go up and down a lot. Sometimes the market is calm and prices move slowly, but other times stocks jump up and down like a roller coaster. And trust me, when that happens, most people freak out. But the truth is, volatility isn't bad, it's actually an opportunity. Why? Because when stocks drop, they go on sale, just like your favorite sneakers or that new phone you've been eyeing. Section 2. How the rich invest in volatility. Here's the big secret. Wealthy people don't panic when the market crashes. Instead, they go shopping. They buy valuable stocks, real estate, and businesses when prices are low. Then, when the market recovers, they make a fortune. Warren Buffett said, "Be fearful when others are greedy and greedy when others are fearful." Let me break it down into 3 steps. 1. Buy when others are selling. If a good company's stock is down 40%, but the business is still strong, that's like getting a $1,000 iPhone for $600. Why wouldn't you take that deal? 2. Hold through the storm. Stocks don't stay down forever. Over time, great companies bounce back and their stocks rise even higher. 3. Sell when prices are high. Once the market recovers, that stock you bought for $600 might be worth $1,500. That's how you turn market crashes into million-dollar opportunities. Section 3. How to invest in stocks during downturns. Okay, so how do you actually invest in a market downturn? Let me give you a simple game plan. 1. Invest in strong companies, blue chip stocks. During downturns, avoid weak companies that might go bankrupt. Instead, focus on strong companies like Apple, Amazon, or Microsoft, companies that have been around for decades and aren't going anywhere. 2. Use dollar cost averaging (DCA). Trying to time the market perfectly is nearly impossible, even for experts. So instead, use a simple trick called dollar cost averaging. This means you invest a set amount of money every month, no matter what's happening. That way, you automatically buy more stocks when prices are low and fewer when prices are high. Example, investing $300 per month in the S&P 500 Index Fund 3. Focus on index funds or ETFs. One of the safest ways to invest during a downturn is through index funds like the S&P 500 or ETFs like VTI, which is the Vanguard Total Stock Market Index. Instead of picking individual stocks, you invest in a fund that owns 500 or so of the biggest companies in America. Historically, the S&P 500 has always recovered from downturns and continued growing. Section 4. How to invest in real estate during market volatility. But wait, there's more. Stocks aren't the only way to make millions during downturns. Real estate is another powerful way to build wealth. 1. Buy when prices drop. When the economy is struggling, fewer people buy homes and real estate prices drop. That's the perfect time to buy properties at a discount. 2. Use rental income for passive cash flow. If you buy rental properties during a downturn, you can make passive income every month while waiting for property values to rise. 3. Flip houses for fast profits. If you're willing to put in some work, flipping houses is another way to make big money. Buy a cheap property, fix it up, and sell it for a much higher price when the market recovers. Section 5. Mindset. Stay calm and think long term. Alright, here's the deal. Investing during volatility isn't just about numbers, it's about mindset. You can't panic when prices drop. Instead, stay calm, think long term, and remember that downturns are temporary. The market has always bounced back, and those who invest when times are tough end up winning big. So here is the conclusion. Now that you know how to invest in stock market volatility, it's time to take action. If you got value from this video, make sure to hit that like button, subscribe, and drop a comment below with your biggest takeaway. Also, if you want a step-by-step guide on how I built my multi-million-dollar portfolio, send me an email and let's connect. Until next time, keep learning, keep investing, and let's build that generational wealth.